What's going on YouTube? My name is Sean and I love real estate, and in today's video we're going to be talking about Bank of America's Home Payment Assistance Program that can help you cover up to $17,500 towards your next home purchase. We're going to be going over how the program works, how to qualify, as well as the pros and cons of the program. So if you're looking to purchase a home in the near future and you want to find a way to get some free money to help you pay for the closing costs and the down payments, then be sure to watch this video all the way to the end. And this is your first time on the channel, welcome. My name is Sean and I'm a real estate investor and hard money lender. And on this channel, we go over real estate investing tips, strategies, and current events to help you become a real estate investor. If you guys enjoy this video, be sure to hit the like button as it will really help this channel grow, and subscribe to see more videos just like this one. So these home payment assistance programs are part of an initiative that Bank of America is creating to help homeowners buy properties across the country. Now the idea behind it is it's going to help low to moderate income families purchase homes and start creating that generational wealth. Now the two programs that we're going to be talking about here that make up that $17,500 is the down payment grant and the America's Home Grant. These are two separate and independent programs, which is great because that means that if you don't qualify for one, you can still potentially qualify for the other one. And likewise, these two programs do stack on each other. So it's $10,000 for one and $7,500 for the other one. So let's go over the down payment grant first. The down payment grant offers up to 3% of the purchase price, up to $10,000, whichever is less, to be used towards the down payment costs. Now the beauty is no repayment is necessary. This isn't a loan, this is just a straight up grant that Bank of America will give you for using their loans. Now there is a cap of $10,000 though, which means that after $333,333, you no longer get that full 3%. So for example, if your property purchase price is $500,000, 3% of that would normally be $15,000. In this case, because you're limited to 10K, then you're only getting $10,000. Now that being said, getting $10,000 in any way, shape, or form without having to pay that back is amazing. So no complaints there. Now these funds are only to be used for down payment funds only and can't be used as a cash back beyond what you put in your EMD. So that means that you will not be able to pocket the extra funds if for some reason you're able to get 100% leverage. So as an example, one way that could possibly happen is if you were to get an 80% loan to value loan with Bank of America and then get another 20% loan to value loan from a second lender or from even the seller themselves as a second lien mortgage. In this case, the entire loan will be funded 100% by someone else, 80% from Bank of America and 20% from another entity. Now, even though you have 100% financing, you can't then just use this program and get 3% of the down payment money and have to be paid back to you. It just doesn't work that way. They won't give you the cash back. However, it does say that in excess of the EMD. So obviously when you buy a property, you usually have to put in 3% of the purchase price as an earnest money deposit. So that is saying that I prove and I guarantee that I'm going to close on this property as long as the inspection check out and everything is good. You put that money in first, and with this reimbursement program, you can get that money back. But if you get to a point where there's 100% leverage and getting the money back is more than what you put in already, then that won't fly. So you're capped at $10,000 or up to your loan amount. Now, this is a very rare situation. It's very, very rare that you're buying a property with no money down, like zero down payment. But if you are in that exact situation, then the easy way to get around this is to just lower your second lien. So instead of asking for 20% from the seller, maybe just get 17% from the seller. So you have 80% from Bank of America, 17% from the seller, and then the other 3% can be covered by Bank of America with this grant program that they pay you for free. So it's great. It's not a loan. You don't have to pay it back. Just get the money from Bank of America. It's easy. Now the second credit is the America's Home Grant Program, which is a lender's credit. So this one is a little bit different. Instead of paying for the down payment, this lender's credit can cover any of your non-recurring closing costs. So that includes title insurance, recording fees, and non-recurring fees such as discount points to lower the interest rate. Now the maximum that they can give you here is $7,500, which is pretty high for closing costs, especially in like lower price markets. So again, to be honest, even though they can give you up to $7,500, if your closing costs aren't at $7,500, then they won't be able to pay you more than that. Now these funds can't be applied towards the down payment. They can't go towards prepaid items such as prepaid mortgage interest or other recurring costs such as property taxes or your property insurance. And again, similar to the other program, you can't get cash back. If it happens to be in a situation where you have everything financed by someone else, you don't just get to pocket this extra $7,500. It has to go towards these non-recurring closing costs. Similar to the last program, this one is also a grant and you don't have to pay it back. So it's absolutely amazing. And if you total both of them together, $10,000 from one program, $7,500 from another program, then in total, you can get up to $17,500 combined, which is absolutely insane and amazing. Now, qualifying for this program is a little bit challenging and not everyone will qualify for it. So first of all, this does need to be for an owner-occupied property. So unfortunately, this cannot be used for investment properties. It has to be for your own primary residence. This program is also limited to certain geographical areas. So if you go on the Bank of America website, you can see which areas they can lend to based on this drop-down menu. You click on find a program, you can see what states that they actually have this program in. As you can see, it's most of them, but not all of them. So out of the 50 states, maybe 30 or so are on this list. For example, let's click on California, and you can even see kind of like where and what are the maximums and the highlights of each program. And again, for any of these programs, if you have any specific questions, I highly recommend that you contact your local Bank of America loan officer who can give you the specifics of each of these programs. Basically, just go here, click the drop down, see what state you belong to, and then just click on the location and find out what their specific programs are. Now, another thing that these programs do have is a maximum income requirement. So that means that if you make more than a certain amount, then you might not qualify for these programs. Again, the way you do that is you go back on the Bank of America website, I'll hop on it right here, and we can see here that you can get up to $7,500 in closing cost help. And if you want to see the details by location, let's click on California, for example. And you can see here that these are the income limits. So in low to moderate income areas, the maximum is $178,000. So if you make this much or less, then you can qualify for the program in a low to moderate income area in Alameda County. So if you're buying a property in a higher income area, then the qualifications are like less. So I mean, this is kind of like a way to balance it out. So if you have less income, you can qualify for, these grant programs in these higher neighborhoods, kind of like promoting these lower income individuals to be moving up into these higher income areas. Then likewise, if you want to promote people who have high incomes, they can move to low to moderate income areas, and there's a bigger range for your income. So you're not like punished if you want to live in a low to moderate income area. So I think this is Bank of America's way of just kind of leveling the field for everybody. Again, like this could be kind of harsh for some people who have decent income but want to live in a higher area in, say, Contra Costa County. They wouldn't qualify in this case. So you definitely need to review this chart, check your income, check your taxable returns, and see if you qualify based on these numbers. Another thing to qualify is the minimum loan to value ratio. So for this particular loan, Bank of America wants your loan to be greater than or equal to 80%. So they want you to get a loan that's at least 80%. In my mind, I think it's because they want to make sure that the loan itself is worth it. And they want to make sure that they're not just giving you this grant for a super small loan. They want to make sure they're extracting the maximum value, because from a lender's standpoint, they get paid on commission and volume. So the larger loan amount is, the more the banks get. So if they're out here giving you grant money, they want to make sure that they get the most they can out of each loan. So unfortunately, that means that if you only want to buy a home for just 50% LTV, 50% down and 50% loan, you won't qualify for this loan program. This loan program is for people who are at higher leverage, 80% or more. But there are maximums too. So after 97%, then you also won't qualify for this loan as well. And there's a combined maximum LTV of 105%, which means that the loan from Bank of America plus the second loan has to be less than or equal to 105%. How that happens, I have no idea. Like, I've never seen a 105% combined loan to value before, but I guess it's out there, and they have these regulations in case someone's going crazy and getting more money from this deal than the actual deal itself, which is insane, but that's the limit. And for loans above 95% loan to value, which I'm assuming is combined loan to value, then the secondary financing must be from an approved community second program. So that means it can't just be some random person coming in with a second lien position. It has to be someone that's from an approved list. And finally, the last qualification is obviously this loan must be financed through Bank of America. Bank of America is going to give you this grant money to get the loan done from someone else. Like, you have to get the loan done from Bank of America. Bank of America has to get paid for doing the loan, and then they're going to give you the grant money. Now, in terms of taxes, Bank of America will be sending you a 1099 MISC, which means that you're going to be liable for any of the income that you receive from these grants. So if you do receive that full $17,500, then that year you'll be getting a 1099 MISC for $17,500, which goes towards your taxable income. You need to talk to your tax professional to see how that translates into taxes. Some people just have no taxes and then this kind of washes and they don't pay anything. But at the end of the day, you'll be receiving a 1099 MISC. So make sure you take that into consideration, that even though this is free money, it is still taxable free money. So in conclusion, I hope you found this video very helpful in breaking down the $17,500 that Bank of America is offering to new home buyers, as well as what you need to do to get qualified for this program. At the end of the day, there's a good chance that you won't be getting the full $17,500. You'll probably get somewhere less than that. I've seen from other reports that you're going to get between $12,000 and $14,000. That's been kind of the average. But at the end of the day, if you can even get $10,000 from this program, that goes a long way towards buying your first home. So it is still an amazing program, and I definitely recommend that everyone just at least check it out. Now, the pros of this grant is that you don't have to pay it back. It's a grant, it's not a loan, there's no interest involved. And the cool thing is, based on all my research and looking at the notes, it doesn't seem like there's a minimum here. What I mean by that is, typically with these first-time homebuyer programs or grants, they typically ask you to stay in the property for at least 1 year. If you were to leave earlier for whatever reason, then usually there's some sort of payback or even a complete voidance, so you have to pay everything back. In this case, it doesn't seem like that's the case. So you could possibly live in it for a few months and decide you want to move somewhere else, and you may not have to pay it back. Again, that's based on what I've read so far. There might be some even finer fine print on the actual contract itself, but that's not something that I have based on my research. Now, of course, the biggest downside is this is a Bank of America only loan, which means that if you're unsatisfied with working with a Bank of America loan officer, you really have no other options here. If you're unsatisfied with their rates, and if the rates are not competitive, you don't really get to shop around because again, this is a Bank of America exclusive offer. So that kind of sucks, right? Like you're limited to the kind of service you're gonna get and you're limited to the pricing you're gonna get because this is a Bank of America type program. These programs can also not be used for cash out refis, they can't be used for investment properties, and there are also income maximums, which means that if you make too much money, you cannot get this loan. So all these are kind of drawbacks, and again, for most people who watch this channel, they're mostly investors, so this won't apply for your investment properties, but it could very well apply to your own personal residence in the future. So this was the Bank of America Home Payment Assistance Program in a nutshell. Let me know your thoughts about the program, and if you think this thing is worth it, if it's great, if it sucks, or if there's any other programs out there that are similar to this that are better than Bank of America's. I highly encourage you guys to leave a comment down below to let me know your thoughts or any information about these other programs. If you found this video to be helpful, do me a huge favor and just smash the like button to feed the YouTube algorithm to help this channel grow. And subscribe to the channel to see more videos just like this one. Thanks for watching, guys, and I'll see you next time. Take care.